So now we will be discussing the second part, that is types of errors. First of all, types of single-sided errors. Single-sided errors already told. They are errors which affects the trial balance because debit is not equal to credit. Now, first single-sided error is casting. That is totaling. Casting simply means totaling. Totaling error is known as casting error or totaling error. Totaling error, it can be that debit or it can be that credit is over or under casted. That means we have added, we are showing more amount than what is there in the debit. Suppose our debit total in the trial, while preparing the trial balance, while preparing any account rather, suppose my cash account when I'm preparing, or I'm preparing bank account, or I'm preparing salary account, or I'm preparing wages, purchase, sales, whatever account. There are two sides in an account, debit side and credit side. In the debit, when we are adding more amount in the debit than what should have been, then we say that we have overcasted the debit. If by mistake we are adding more than the amount in the credit, then we say it's a overcasted in the credit. If we are adding less, then it will be undercasted. So account can be overcasted or undercasted. And if overcasted or undercasted, then there will be an error. This is called totaling error or casting error. Over here, one example is given. If sales book is overcasted, then sales account will be debited and suspense account will be credited. To overcome this error, this is the rectified part of the error. Sales account is overcasted. That means my sales account credit, sales account also has a credit balance. That is overcasted, means I have recorded more sales. Then obviously, now to reduce my sale, I have to debit sale, and there is no vice versa account in that. That is why we write suspense. We will explain this part again, students, so don't worry. Now comes carry forward error. Same treatment as casting error. Now, what is the meaning of same treatment as casting error and carry forward error? Carry forward error means when we are totaling the error, when we are totaling and we are taking the same account in the next page. That means we are carry forward the same total in the next page. Over there, we have added wrong. Either we have added more or we have added less. So that is why it will be also having the same totaling error or carry forward error. Now, posting error. That means in the salary account, I should have written 2 cash. That means I should have debited salary account when we pay salary. But instead of debit, either I have not recorded in the debit side or I have recorded in the credit side of the salary account. So either whether we have omitted to record or whether we have recorded in the wrong side, or we have written in the debit side but written the wrong amount. Suppose I paid salary 1000. I have written 2 cash 100 rupees in the salary account. So in that situation, students, what will happen is that there will be an error. Let me explain you this one with a written format. Uh, Suppose when we have prepared a purchase account, we have purchased goods of suppose 10,000 and by mistake we have recorded 1,000 only. So when I have recorded by mistake 1,000 instead of 10,000, so this will be what? My debit of purchase is less. That means 9,000 rupees I have recorded less. I should have, when I purchased the goods in cash, then I should have debited my purchase account by 10,000. But by mistake, we are debiting only by 1,000. That means 9,000 rupees less we are recording. By mistake. So that has to be corrected. We cannot write over here now because the trial balance is already prepared. So we have to rectify by passing separate journal entries. That only we will learn in later classes. Suppose we have sold goods in cash. So it should be cash account debit to sales. So I should have credited my cash account. Suppose 20,000 rupees goods are sold. I should have credited my account by 20,000. But I have not done that. What I have written, I have made a mistake over here. I have written over here as 2 cash. Here only I have written 2 cash and I have recorded it 20,000 over here. That means by mistake, I have overcasted my sales account by 20,000. Actually 40,000, not recording 20,000 over here and recording in the wrong side, 20,000. 40,000 difference is there. So these errors need to be rectified. My cash account is correct, students, because my journal was correct. I have passed the correct journal entry, purchase to cash, but while posting them, I made a mistake. In purchase, I have posted instead of 10,000, 1,000 in the right side. But in sales, I have done a grievous mistake that I have not written in the credit side, the sales, the cash sales, because the journal entry is cash account debit to sales. So I should have posted it by cash. Instead of that, journal entry I did correct, but accountant by mistake or whatever, he has written it in this side 20,000. So there is an error. These errors are going to affect my trial balance because my total of purchase account, sales account will be wrong. Though cash account is correct, because in cash journal entry in the cash book I have done it correctly. Over here I have not done correct. So in this case, this is termed as single-sided error. That means those errors which are committed after the preparation of journal, after the preparation of day books, that is a part of journal only. That means in the ledger, if you have committed the mistakes, in the account when we have committed the mistakes, then we have an error which will affect our trial balance, and this type of error will be termed as single-sided error. So proceed with the different types of errors. So even I'll explain you with the same thing, my totaling error, that is my casting error. Casting error, suppose over here some more figures are there. Some 200 is over here. But while adding, I am writing only 12,000 or 1,20,000 I have written. So this is my casting error. That means my totaling error. Instead of 1,200 I have written 12,000 or 1,20,000, whatever it is. Okay, students. So what we have understood is these errors are, see, because of this low network, this is happening. So anyhow, so this one in the purchase account we have wrong total. Similarly, carry forward means what? Suppose my this page is over here, and in the next page again I have to carry forward my sales account balance. In the next page, over there I am totaling it wrong. That is called carry forward error. So posting error, carrying forward error, we have understood. Casting error, we have understood. Now balancing. Similarly, over here, I need to balance this one. Over here, nothing is there. I should have written this. But instead of writing this as a balancing figure, I have recorded suppose 2,000 only. By balance, the balancing figure I am recording wrong. By balance, we have recorded wrong. And that balance only we are bringing forward in the next line as two balance. Wrong. Or over here I have written correctly, but over here I am bringing wrong as two balance brought down. Similarly, sales, I am writing 20,000 correctly balance, but when I am bringing it down, the carry forward balance, this balance only will go in the trial balance. Over there I am writing only 1,000. So this balancing total is wrong. Balancing, while balancing I am doing wrong. So in this case, there will be also an error, because this figure only we are taking to the trial balance, which is wrong figure, and hence my trial balance will not match. This is also called single-sided error. Hope you have understand single-sided error. One more, not recorded in trial balance. My ledger is everything correct, but I failed to record in the trial balance. One account I have skipped. So there is suppose purchase account, sales account, wages, salary, so many accounts. I skipped wages account. Suppose there is one more wages account is there, which I have skipped. I have not recorded the wages account in the trial balance. I skipped it out. So in that case, that will be also termed as single-sided error, because only wages will be affected. My cash account is correct. Okay. Now come to the double-sided error. Errors which affect two or more accounts, double-sided error, cannot be traced through trial balance. There are different types. There is compensating errors, that is errors of posting in wrong account. Salary we have paid, we are recording in sales. So, suppose salary we have paid, we are recording in wages. Two cash in the salary account I should have recorded. Two cash I should have recorded in the salary account. I should have recorded over here, suppose this is my salary account, and I should have recorded two cash over here 1,000. But instead of that, I have recorded that same amount, but in wages account. So my debit and credit will be same, because over here also I am writing in the debit side only. I have not recorded over here. What I mean to say is, students, that instead of debiting salary, I have debited my wages account in the ledger. My journal was correct. Wages account I have recorded over here. So that is also my wrong. This one will be giving, means my trial balance salary will be 1000 less, but my wages will be 1000 more. So that is also a mistake, but that mistake cannot be found out through trial balance, because trial balance will match. It is in the debit side. Salary is also debit, wages is also debit. So trial balance will match. So we cannot trace out this trial balance, this mistake. This is called compensating error, error of posting in wrong account. Error of principle. Error of principle. Acha. So error of principle is what? Error of principle is an error in which we have made a mistake while passing the account by preparing by using wrong principles. That is, we have treated revenue expenditure into capital expenditure, or we have treated a capital expenditure into revenue expenditure. So that is called error of this one. This is a error of commission or error of a principle. Then error of omission, fail to record. Entire journal entry we have not passed. Error of omission. Complete omission. That means paid wages. We have not recorded wages to cash. Therefore, we have not recorded in the ledger. We have not recorded in the cash book. Nothing, nowhere. So it is an error of complete omission. That will also not affect my trial balance. Let's do these errors in detail. Error of commission. First of all, definition. This type of errors occur due to negligence of bookkeeper, clerk, or accountant. These errors are often caused due to mistake committed by the clerk. They are also called clerical errors, also known as error of inadvertence, by mistake, by not keeping so much care, inadvertence. If we debit or credit account other than the correct account, but when the correct amount, with the correct amount, the total debits and credits in the ledger will remain equal, and hence the trial balance will not disclose the error. As I have told you already, I have recorded the correct things. Suppose I have wages paid 1000. Instead of that, in my journal only I am writing wages paid as 100 and 100, wages took as 100. So this is an error which is not disclosed to trial balance, but there is an error. We take a look at a few more examples over here. Entering the wrong amount in the correct subsidiary book. That means subsidiary books means our day books. In a day book, suppose my sales book, I have sold goods to Ram. So I have to record sales of 1 lakh. Instead of that, I have recorded 11,000. So my subsidiary book, my journal only. Subsidiary means all the journal entries are mistake. Subsidiary book is a part of journal. So over there, if I have done mistake, so my sales will show less. So my debtor will also show less, because subsidiary book records all the credit transactions. Posting the correct amount to a wrong subsidiary book. Posting the correct amount but to a wrong subsidiary book. Suppose I have recorded in sales account, I should have recorded I have sold goods to Ram. Sold goods to Ram 10,000. So I should have recorded Ram 10,000. But instead of that, I have recorded in the purchase return book as Ram 10,000. So my purchase return also has a credit balance, sales also has a credit balance. So my overall ledger account, my overall trial balance will match, because I have still done in the credit side only. Sales also credit, purchase return also credit. So in that case, there is an error, but that error is not disclosed through trial balance. Similarly, posting the wrong amount to the correct side of the account. Correct side of the account, wrong amount. Now, correct side, as I've already told you, both the account, purchase account as well as cash account. In both the account, I have done wrong amount. That is also an error. Posting the correct amount to the wrong side of the account. Posting is done twice. I have paid wages, 100 rupees. I have to record in wages to cash and in cash by wages. But instead of that, to cash by wages I have recorded, but twice, 2 times I have recorded, or I have double the amount and recorded. So there is an error, and this error also cannot be disclosed in the trial balance. Posting to the wrong account of the same class. Cash paid to Hari. Instead of that, I have recorded in my books cash paid to Syam. So Syam is a mistake. Hari should have been there. So this is an error which cannot be disclosed through trial balance. Other types of errors arising out of casting, posting, carry forward, balancing, etc. also fall under this category. That is error of commission. Error of commission means error of committing mistake. There are 2 effects are possible. Either the correct account will not be debited and an irrelevant account will be debited, or the correct account will not be credited and an irrelevant account is credited. So these are the different errors of commission. Similarly, error of principle, which I have already told you, error of principle are caused due to the bookkeeper's or an accountant's ignorance or improper understanding of principles of accounting. The error resembles error of commission except in one respect. Error of commission usually results in an oversight, whereas error of principle is caused to lack of knowledge of accounting principles. Error of commission, he knows, but by oversight, overlooked. But error of principle, the accountant doesn't knows, and he has committed a mistake. That is the difference between error of principle and error of commission. The common error is the treatment of capital expenditure as revenue expenditure or revenue expenditure as capital expenditure. Capital expenditure is expenditure on purchase of fixed asset, whereas revenue expenditure is incurred on day-to-day running of the business. Thus, the purchase of motor car is a capital expenditure, while the purchase of fuel for the car is a revenue expenditure. I'll give you one example how the accountant may make mistake. Purchased a car, purchased a car, old car, 1 lakh. And then and there only we have paid for its repairs to be used, 10,000. So the entire car value should have been 1,10,000. But the accountant, because of this error of principle, he has written car to cash 1 lakh, 1 lakh, and then repairs to cash 10,000, 10,000. This repairs is actually not repairs. This is not a revenue expenditure, but he has written it as a revenue expenditure. So this is the error of principle. This type of errors we will not be able to disclose through trial balance. Error of omission. Omission, as we know, we have not recorded. When some transactions are completely omitted from the books of accounts or entered but not posted, they are treated as error of omission. Now, error of omission can be of two types: partial omission, complete omission. Complete omission is a double-sided error. It will not affect my trial balance. Totally we ignored paid wages, but totally ignored, neither in the cash account, nor in the cash book, nor in the wages account. Neither means you have not recorded anywhere, not even passed the journal, or if you have passed the journal, we have not posted. Purchase from Siam, purchase to Siam. We have not recorded in purchase to Siam. So what we have seen is that we have recorded the journal entry, suppose, but we have not posted it in the purchase account, rather in the Siam account. So in that case, will be called error of complete omission. In the case of partial omission, the transaction is recorded in the books but not posted in the ledger. This type of errors can happen in relation to any subsidiary book. For example, goods purchase returned to the supplier is entered in the purchase return book, but not posted or in the debit side of the supplier account. Means in one of the account we are not recording it. That will be termed as error of partial omission. Students, hope you all have understand. Please go through it, write in your copy and read it again and again so that we can start our this one next day, our sums from the next day. Thank you, students.